So you may have seen this quote before: what is right is not always popular, and what is popular is not always right, by Albert Einstein. And this is one of those quotes that one of my teachers had in elementary school on a poster in her classroom. I can picture it in my head, and it stuck with me. And when I had my channel over the summer, this quote came up, and it became sort of a guiding beacon or an overarching principle that I kept coming back to. So in that spirit, I wanted to do something for the apes. What I've got is 4 fact checks. These are 4 very serious issues, questions, that have come up repeatedly over the course of 2021. And I'm going to fact check these. I'm going to provide evidence. The links will be in the description for all of the evidence that I use, all the sources. I am going to go through these relatively quickly because I don't want to spend my whole day on Christmas Eve making videos. However, I do think this is important, and I selected these 4 items specifically because I kept seeing them come up throughout the year, and it's my hope that 2022 will be a more evidence-based year. This is intended as a starter. These are 4 issues that are important. I'm going to go through them quickly. Here we go. The first item: ORTEX self-reported data and return shares. Self-reported. What does self-reported mean? So we've all seen these types of posts. Many of you apes will already know this, but this is for the baby apes. All the sources that ORTEX pulls data from are self-reported by the very hedge funds and market makers we are trying to squeeze. That's 100% incorrect, okay? Let's look at where actually ORTEX gets their information from. And I'm not an ORTEX shill. I'm just pointing out the truth here, okay? So ORTEX short interest data is sourced from the world's largest combined pool of agent lenders, prime brokers, and broker dealers who submit their inventory. Okay? So, in other words, these are the lenders of shares, not the borrowers. So this seems to suggest that the data comes from the hedge funds. Those are the borrowers. Those are the people that borrow the shares and short sell them. But no, that's not where ORTEX gets its data. From agent lenders, prime brokers, and broker dealers who submit their inventory. Those 3 groups collectively are the share lenders. Those are the parties that lend shares to the hedge funds or to individuals, to anyone wanting to short sell a stock in a traditional manner of borrowing a share and short selling it. Okay? So that's something that we need to really correct. It's not self-reported in that the hedge fund is reporting it. Think about it. Why would the hedge funds report anything to ORTEX? Short positions are not on 13Fs. There's no other reporting mechanism that's required. Why and how would they submit that data to ORTEX? Makes no sense. But nobody's ever questioned it. Nobody's ever thought about it, I guess. Nobody's ever read these basic pages on ORTEX that talks about it. So I have links to these 3 articles on ORTEX right here in the description. And then I'm going to come over to this tweet from May of this year, and this is going to address the second item, return shares. Okay? So what about return shares? To short a stock, you have to borrow it and then sell it. To return it, you have to buy the stock back, wait for it to settle before returning it to the lender. The shares returned today have not been bought today. In other words, what they're saying is, when you see these return shares come in, like this 7.84 million, those shares have already settled. Those shares have already gone through the T+2 settlement period. Remember, there's that 2-day grace period for settlement and clearing, okay? So the shares being returned happens after T+2. So if we see shares returned on Monday, for example, what is the earliest that those shares would have been bought back to the market? Short positions closed. What's the earliest? Well, 1 day prior is Thursday because the market's closed today, so yesterday. And day number 2 is Wednesday. So Wednesday. Shares that were bought to close on Wednesday will settle on Monday. Trades that were executed on Thursday will settle on Tuesday, and so on and so forth. But this is very important because this tells us the answer to a question that we've been asking on this channel. How does that work? How does T+2 factor into it? Here's their answer. So the shares returned today have not been bought today. They're returned at the end of the process after the settlement period. Also, that definitively says returned shares are short positions that have been closed. They have been bought to close, bought to cover, covered, short positions closed, returned to the lender. Okay? Put a link to this tweet in the description as well. Moving on. Dark pool percentage. Okay? A lot of talk about dark pool trading, dark pool volume these days. I want to clear up some misconceptions here about dark pool. Speaking of dark, there we go. So I'm on chartexchange.com here. This is a good resource for market share information, exchange percentages, things like that. Short volume, failed to delivers, all that stuff is here. It's much neater, cleaner, and more detailed than Market Chameleon. So I recommend using this for your dark pool, your short volume, FTDs, things like that. Even just historical price is much cleaner on here than it would be on Market Chameleon. Okay, so for yesterday, Thursday, so we can see that we've got exchanges here, percentages, volume, and then a 30-day percentage. So for off exchange, we've got 58.84%. Now, if we look at all these entries underneath here, an ape asked one time if those were dark pools. No, those are the actual exchanges. Those are the lit exchanges, my friend. So off exchange is all contained in this entry right here, okay? So all your different off exchange venues, ATS, ADF, OTC, all that type of off exchange execution is going to be handled within this off exchange entry right here, okay? So we can see here that you have it in graph form, which is kind of neat. You can see it over time. It's hanging out right around 50 to 60%. It's not really changing that much. Even when the volume is drastically higher or lower, not that different. And that makes sense. So if retail is not engaged on a certain day, there still are some retail investors that are involved. So it makes sense that the percentage or the proportion would be about the same, but the volume would just be way lower. So in other words, 50 to 60% of retail orders are executed off exchange because that's how the market maker does it. Then it doesn't matter how much volume there is overall on that day. It's going to be somewhere in that range, 50 to 60%, regardless, because that's how the market maker executes the orders, and those are the trading habits of the apes or the retail investors. Tends to work out that way with the brokerages and the platforms and whatnot that they use, and the market makers that are used by those platforms, and so on. Okay, so let's get to the myth and the fact check. So there's a lot of talk about dark pool manipulation, dark pool illegal activity, illegal use of dark pools, price suppression, and whatnot. Now, Chart Exchange changed dark pool to off exchange, and they talk about why here, and there's a lot of information about the different types of off exchange execution, but essentially they all report their volume to the consolidated tape, or the CTA. That's the main journal for the stock market trades on and off exchange. They get reported to that. Okay, so what we see here on this day, Thursday, is that we have 58.84%, or 21.7 million shares traded off exchange. Now, the apes decry that as manipulation. However, what they're not understanding is that in that off exchange, and it's easier to understand because now it's off exchange on here. It's not dark pool. It's off exchange. Dark pool is one type of off exchange execution. However, it's not the only kind. Okay? So there are a handful of different types of off exchange execution. They're used in different settings for different things. And I'm not going to get into the details of that here because I want to get through this quickly. However, links to this stuff, you can check it out yourself. But basically, a good chunk of this off exchange volume is retail orders that are being executed off exchange by the market makers, the internalizers like Citadel, Virtu, Apex, etc. So you can see that 21 million volume was done off exchange, and that represented 58%. So you have to think what brokerages are using off exchange execution, which ones are using lit exchange execution, and it becomes clear that, well, most of the brokerages are payment for order flow. There are only a couple that are not payment for order flow. They don't accept payment for order flow. So the internalizer trades are reported as quote unquote dark pool or off exchange. That's where most of this volume is coming from. And when you talk about percentages, that's where it gets tricky. You talk about percentages, well, it's been 55% for the last 30 days, 30-day average. Well, that's because there are only 2 brokerages that don't accept payment for order flow. So most of it is going through these payment for order flow brokerages. And so it gets routed this way. Okay? But the point here is doesn't seem to be an illegal thing. In fact, it's actual retail orders. So when people complain about the dark pool 90%, well, first of all, it's not 90%. There's no day on here where it was 90%. And you can scroll down and look, and it has the historical data for this too. But the problem is here that they're decrying this dark pool as manipulation. And I'm going to stay off exchange from now on. I've been trying to switch to off exchange terminology. It makes more sense. Off exchange is just stuff that's not on the stock exchange. Okay, so if it goes through Citadel, if it goes through any of these payment for order flow, it is going to go into off exchange when it's reported. So that's why it's so high. It's not price suppression. It's not illegal activity. It's payment for order flow at work. Citadel matching orders that are submitted with orders that they already have in the system. They're matching them internally and just reporting it to the market. You remember those trade reporting facilities and all that stuff? That's what we're talking about here. That's off exchange. Okay, there's no actual market in between. They match it and they send it to FINRA and that's it. Okay, so dark pool is really kind of overblown and it's not really well understood. Moving on. Let's look at the chart here. I have buying low versus buying high, the numbers. So Trey has a video where he was getting into a fight with Charles Gasparino. He said something like, apes didn't buy high and they're not going to sell low. And he was serious about that. So what I have here is the AMC chart, year-to-date chart. It starts in May here on the left side of the screen. And then I have 12 volume at price bars on the left. They're showing us how many shares were bought and sold at each of these slices of the price. Okay? Now I want you to direct your attention to the top bar because in this time frame, so this is May 6th through today, there have been 1.7 billion shares bought at the price range 58.09 to 62.55. 1.7 billion. Whereas the down volume was 243 million. And if you just glance down, none of these green bars are as long as this green bar up here, which indicates that this region up here has the most buying. I just want to point that out, that yes, actually apes did buy at the top, and there's a lot of selling happening down in here in this mid-range area, and actually right here too. This one is almost a 3-to-1, 49.16 to 53.63. It's almost 3-to-1 sells to buys, and so is the one above it. It's 50-50 practically. But the top, the peak, 1.7 billion versus 243 million. So that's pretty substantial. Just wanted to point that out. Moving on to the last item, share turnover. Okay, so I saw a Reddit post talking about AMC trading over 30 times its available float this year, and GameStop 7 times, and they say solid fact, which is funny because it's not really a solid fact. But then they go on to compare it to Apple, Microsoft, and Google, and talk about how they only traded 3/4 of its float of Apple, or half of its float of Microsoft. I don't know why they said 2 out of 4. And Google traded 1/4 of its float. Okay, their whole float has not been traded once. We traded over 30 times the float. Okay, and then they connect this through an association, through an assumption, with no evidence whatsoever. They connect it to synthetic shares, of course, synthetic shares. So share turnover is simply a measure of liquidity. How easily can you sell those shares? So you're dividing the total number of shares traded during some period by the average number of shares outstanding for the same period. How I got my figure was I went to Y charts and I had to get rid of this. I could see the chart. Come on now. It's there. There we go. And I looked at 1 year, and I can see here that in the end of December, there were 216 million shares, right? What I did was I looked at each quarter. So this is my first number, my second number here, my third number here, and my fourth number here. So I took 4 figures from this graph and I averaged them. So I added them together and then divided by 4, and I got 448,560,000 figure that's in this calculation right here. So our total trading volume on AMC for the year so far, according to Fidelity, is 28,740,349,900 shares. Okay, so 28.7 billion. So what I did then, I took the 28.7 billion, that's the first number in the calculator, and I divided that by our share average, which was 448 million. Is the average number of shares held. And that's where we got 64. So the Reddit post, remember, if you recall, the Reddit post says AMC traded over 30 times its available float this year, which I suppose technically is correct because 65 is greater than 30. However, it's not very accurate. So I don't know what's going on there. I just want to explain what the deal is with share turnover real quick. So this is from Investopedia again. So share turnover does not signal anything about the quality of the stock or why for the period being measured. It may be more or less liquid than other stocks. Because it speaks to the quantity and not the quality, share turnover should not be used as a primary investing criterion. So one of the things it mentions is that you would think that large companies would have a higher share turnover. That's kind of the intuitive view. However, if you think about it, a large corporation is going to have a high number of shares. Okay, so there's a lot of shares out there, billions of shares, let's say. Number 2, large corporations, large companies that are publicly traded tend to have high stock prices. So that automatically eliminates some of the participants that will not be able to afford the stock, or they'll have to sell it, or they just won't buy it because it's too expensive. If it's $200, like Microsoft, versus $20 or whatever Robinhood is. Now, I know they're different companies, but just as 2 examples. Now, contrasting to that is that smaller companies usually have cheaper shares, of course. And so they tend to get bought more by retail investors. So you could see a smaller company with a cheaper stock price. It would be easier to load up on those shares and unload them because it's a smaller commitment of capital. Just to summarize here, this post is incorrect. It is making the assumption that these large companies should be trading a higher percentage of their float, but in reality, all of these companies that are mentioned here are very high stock prices comparatively to AMC. Apple, Microsoft, and Google, those are all 3, blue chip tech stocks. They have billions of shares each one, and the stock prices are fairly high. They're over $100. So, yeah, it's not a very well-crafted argument. It's not true. It's just making a bunch of assumptions, and that's no good. That really doesn't help anybody. It doesn't really help anybody. Okay, I'm getting a bunch of messages now, so I'm going to go ahead and close this video. Hopefully you found this interesting, useful. Leave a comment, join the finance chat. I think I have one more fact check that needs to be done. It's fairly egregious, and it's a new YouTuber I haven't looked at yet, so I'll maybe do that tonight. We'll see. Anyway, thanks for checking it out. Leave a comment, join finance chat. Catch you in the next one. Have a good Christmas Eve. See ya.
I met you at my show.